Welcome to NavTalk Series 3. I'm Simon Prowse, your host. NavTalk is a podcast where we discuss a broad range of topics which will be inspirational and at times fun. NavTalk, brought to you by the Navwealth Financial Group, helping you reach your destination in life on purpose. Welcome once again to NavTalk. It's a great pleasure to be here today. And in the room, I've got the dynamic duo back. And I've got Hayley Kalms. Hi, Hayley.
Hi.
And Hugo Furzer.
Hey, Simon.
Now, we're talking today on the end of financial year and tax planning. It is a topic which seems to come around too often. Can you believe it? We're here again. It wasn't sort of a couple of weeks ago. We were sitting here last time doing this.
So much has happened. It's been crazy. Can't believe we're in June.
Before we get into today's talk, which is end of financial year and tax planning, I just thought I'd introduce our program to everyone out there. Every year, we prepare an end of financial year tax planning checklist. And part of that program is this talk. And together with this talk, we put some basic documents together. There's a bit of a summary. Then there's a checklist there for companies and company accountants, if you like. So it's not just for the company owners, and towards the end, there's a overview or a tick box, if you like, of actions to complete before the end of the financial year. And then we also have one for individuals. And it's all about preparing yourself for the end of financial year and making sure you cross that line, the finish line, we call it. Us accountants are very good at that. Making sure you finish that end of financial year in a way that's optimizing what you want and your outcomes. And everyone's outcomes and so forth are very different. A bit later, we'll also touch a little bit with Hayley and her team on the business planning side, and that's called preparing for the new financial year and all those little things that we can do to make sure that we really get the most out of the next financial year and where we want to head with our business. But right now, let's jump into our end of financial year planning and tax planning. So I might start with you, and it's been a year out of COVID and some normalities coming back into life. How are you finding it out there with your business clients and the bookkeeping world?
I mean, business is improving, definitely, but I think people are still really wary. The most common thing I get asked is about cash flow. How do I control my cash flow? Do you have a cash flow template that I can use? Because people are worried with rising interest rates and rising living costs. It impacts business as well, not just individuals and families.
Yeah, we're seeing a lot of that. And I think the last one I was looking at was like a 12% increase in our insurance costs. So we're seeing it across the board. So it's really starting to bite a bit.
It is, definitely. And people are really worried about future cash and cash flow with everything. Things we'll touch on later as well that are increasing for businesses too.
Yeah, so cash is king at the moment.
Yeah.
And Hugo, how have you found this year with the clientele and what's going through those clients' minds and how they're dealing with life at the moment?
I think a lot of our clients are dealing with tax hangovers. So they've had a couple of good years after COVID, and now they're stuck with these huge tax liabilities that they're still dealing with.
Yeah, and those tax liabilities are leading to what Hayley's probably alluded to, this cash flow crunch. And suddenly they're on payment plans or like. You're seeing more of that?
Yeah, so look, the ATO, throughout COVID, they kind of left people alone with tax debts. But now they've come full face and they're actually chasing people down.
So what we're actually seeing is probably the head in the sand in COVID, building up the debt, not dealing with it, ATO being friendly and not chasing it, and now the perfect storm's coming. We've got rising inflation, we've got cost of living, plus we've got this hangover.
Exactly.
Right. And Hayley, can I switch back to you? We're getting towards the end of the financial year and you're very close to these businesses. What are you finding the common issues that are coming up in when you're addressing their work and trying to get them ready for that 30th of June?
I'm finding more people want to try and do things themselves and try and sort of back to this cash flow issue. So it's always, and make mistakes. So not doing things the right way, which means in the end, it just costs people more money because we're coming in and adjusting all their errors to making sure that they're compliant. So it's really important that you do get some good advice and know exactly what you're doing when it comes to your accounts and your finances.
Yeah, so the belt tightening is literally belt tightening and going to what you think is the easiest fix, which is do my own books. But those people doing their own books aren't trained at it and more often than not will cause more problems than benefit. Is that fair?
That's fair. Yeah. And they're not sure of GST issues and how to actually deal with GST properly, which then leads to maybe overpayment of BAS or underpayment of BASs and little things like that can increase costs from businesses.
Yeah, absolutely. And I dare say the transparency of data now between the business and the ATO, like single touch reporting, is then going to create an avalanche of problems and issues if you don't get it right.
They know more and more about every single business transaction that you're making. So they're going to be asking more questions, I think, more audits even on businesses to make sure that everything is being claimed that it should be and everything's above board.
So more important than ever, data capture and the right data capture is starting to become very important, because if you lodge something wrong, it creates an avalanche of mess.
Yeah, correct. Yep.
Okay. And Hugo, what are you seeing in the world of the tax man and dealing with financial statements and tax returns being lodged? Are we seeing a lot of things that are overlooked? For example, cryptocurrency. It seems to be the flavour of the last few years. Are people all over that and reporting it, or are we getting in trouble?
That's a good question. I think, look, the ATO in some instances, they know that you've traded in crypto, so they're aware of it and it pops up on your pre-filling report at tax time. I think people forget about it because they've either had a dabble and the money's lost, or they can't access that wallet where they made the investment in the first place to get reports. They might be thinking it's just too hard to deal with.
Okay. So more importantly, if they have lost, it's a capital loss, and you just have to prove that you've parted with the money and there's a footprint. So more importantly than ever, that documentary evidence is probably becoming pretty critical because the footprint's not there as it would ordinarily be.
That's right. It's harder to get information than a broker.
Yeah.
I mean, some of those crypto houses have gone under.
Yeah. Yeah. And then your historical data's gone.
It is. That's right. But the ATO knows that you've traded and they're expecting to see something in your tax return.
Okay.
So when it's not there, you can expect a review.
Yeah. And in that world, just for everyone out there, it's like any investment. We work out what it costs to get in. We work out what we receive to get out. That's our capital. And then when we're in that investment, if we generate income, we declare that income and we write off the expenditure to generate the income. So it's the same as everything else, right?
Exactly. Yep.
Yeah. So it's important to get that evidence, and really the paper trail with the ATO's transparency is probably more important than ever.
Yes.
And the compliance side of, logbooks and allocation of interest on rental properties and things like that, critical.
Yes, definitely.
Yeah, right. Well, let's get into the program a bit, guys. And I'm going to try and sort of take this on the way where we can sort of bounce back and forth a little bit. Overall, and we're not going to get into detail, in our checklists that are provided with this talk, there is detail and people can read through it and take their time. Let's just go overall. What have we got to do to get our house in order, and what are the common things? Might start with you, Hayley. And in terms of getting it right for the 30th of June, at the back of the business checklist, you've got a one-pager, if you like, of all the boxes to go through to finish before 30th of June. What are the commonalities of that?
So it's really just having your accounts prepared as much as possible for your accountant to come in and make some tax planning decisions. And so it's all ready to go to do your tax returns for the next financial year. Because if you leave it till 6 months, 9 months after the year's completed, you often forget things aren't in order. So just doing things like having all your bank statements and credit card statements, available and ready to go. Make sure you do a stock take, have a list of all your assets ready there for your accountant to assess, and so they can easily look at depreciation and things like that. And one of the most important things is try and pay your super by 30 June, because then it becomes sort of tax deductible.
Okay, that's probably a pretty important one that we touch on every year. We say pay it before the 30th of June, but that really means a number of days before. Talk us a little bit on that.
So technically probably should be done by the 21st or the 20th even of June, so that it hits the super clearing houses and actually clears the super clearing houses by 30 June.
Okay. So the money's got to be in the super before the 30th of June, not just left our bank account or identified as a liability.
Correct. Yeah.
Okay.
Yeah.
And is there any particular timeline, or is it really just you've got to go early?
Yeah, go as early as possible as your cash flow allows. Xero and all the major softwares will let you know what the actual deadline should be, so that they know that, because you use their clearing houses usually these days if you're using a software system. So they'll let you know the very last date, which is usually around the 20th, 21st. Yeah.
So you've sort of mentioned a few things there. Let's start with the profit and loss. You, as a business owner or the bookkeeper for the business owner, you have a look at the profit and loss. And I assume you're looking at firstly the profit and what that looks like. And then secondly, you're cleaning up that year, making sure your allocations are right and so forth. What sort of common mistakes do you see in the data entry?
Most common mistakes are to do with wages, miscoding of wages. So the wages and payroll don't all match up and reconcile. And it's GST. So claiming GST and things that maybe you shouldn't, especially with motor vehicles, actually, if you purchased a new motor vehicle or motor vehicle costs, not all of them necessarily you can claim GST on. And there is a limit on the amount of GST you can claim when you purchase a motor vehicle.
So we've got a different regime for electric or hybrid vehicles versus diesel vehicles. Diesel.
Petrol.
So we've looked at the P&L, we've done a bit of a clean-up, and we've sort of identified anything that's really sticking out. Then we go through our balance sheet. And the balance sheet, I probably think, is probably more important to keep clean and to have healthy. Is that a fair assumption?
It's a fair assumption, yeah. I think especially when it's coming to assets and assets purchased, loans. So if you've got the owner's drawings or loans, and clearing accounts, suspense accounts. We don't want anything in those accounts at the end of financial year. We want all that cleared out.
Okay. So you mentioned stock take, assets. Make sure your bank account's reconciled. Get your last bank statement for 30th of June. Anything particularly else?
No, just those super payments. That's it.
Yeah. And I like what you said about the payroll, because I don't know about you, Hugo, but I see a fair bit of that payroll where they might just do a journal or they've put it to a wrong account or something. That is, as have the information, you're going to have it in your financials, it's going to be in your BASs. So you're coming at three angles to make sure they're reconciled. Now, Hayley, in terms of the way you go about things, you've got your checklist in there, and really just work your way through that checklist, get on the phone, send an email if you've got any problems. But really, it's probably important to knock off and make sure you're done at the 30th of June, or if not before, given super.
Yeah, correct.
And are you finding when you do that, and you prepare a group of reports when you do it and send it to the accountant who then does all the compliance activities, do you find the feedback on that is fantastic and it's really easy for the accountant to pick up?
Definitely. It makes it all more streamlined. So your accountant then doesn't have to go and investigate and do their own sort of reconciliations or find out where this went, that went. We bundle it all together so the accountant can just pretty much pick it up and do their reporting and compliance.
Fantastic. So we'll come in a bit in the moving forward. So we've got our house in order up to 30th of June. We call that the review mirror. We looked in the review mirror and we made sure that it's nice and clean and we've got it neat and tidy. Now, Hugo, I'm going to jump across to you because Hayley and the team, we work together on many clients and they've done the cleanup. But in terms of the other aspects to the cleanup and where we're going with it, what would your sort of approach be to companies out there that they can do before the 30th of June to start to get a feel from getting their books ready, the review mirror again?
Okay. Well, some businesses have debtors and creditors on the balance sheet. It's worth looking at those just to see what can be written off as far as the debtors go. And creditors, you just might want to make sure that you've got every single expense sitting in that creditor's account that you can.
So in other words, we've got a bill. We might have got it on the 3rd of July, but it raised the 30 June. We can include it in that creditors list.
It's all about the date on the invoice.
Okay. And debtors, let's say we've got a really old debtor and it's within 12 months. Can we just write it off?
You have to have had a really good crack at trying to recover the debt. And you've got to be able to prove that you've done that. And if there's no way that you're going to collect it, then you can write it off.
And what if it's over 12 months old? Is there any difference to the approach?
It's the same thing.
Okay. Now, I understand too with GST, if it's over 12 months, we can actually go back and amend, we can write it off for GST purposes on an accruals basis, but we don't actually write it out of our books. Is that fair?
That's right.
Yeah, so we can claim back that GST we said we got.
Exactly. If you paid the GST on something you're not going to collect.
Yeah,
yep.
Great. All right, so that's debtors and creditors. Where are we going from there?
Let's say stock on here.
Okay.
For trading stock. So it's worth doing if you've got a lot of it, it's worth doing like a stock take to work out the value of what you've got left at 30 June, because that may be somewhat different to what you've got on the balance sheet in your books.
And then anything else, particularly that you're saying?
There's the normal things that you can do, which is to defer income. So that means sending invoices out on 1 July as opposed to 30 June. Or you can bring forward expenses into the current year rather than pay them next year.
Tell me, with the changing tax rates for companies coming down to 25% from as high as 36, even going back away, 40, do you think that's probably in a client's mind a bit lower on the priority and bring expenses forward and deferring income is not as high on the agenda anymore?
No, well, given that this year's tax rate and next year's tax rate are the same, there's no tax savings, but all you're doing is not paying the ATO for another year. So if you're going to incur the expenses anyway, well, you might as well do it.
But going back to Hayley's point, cash flow's tight.
Yeah.
It might add a little bit of fuel to our fire.
Yeah.
Okay. Now, you've covered a bit of the standard stuff and the rest is all in the checklist. So we won't get into the detail. There's a couple that I want to just touch on that I think are really important this year because they're in the regime. I might quickly just go to you, Hayley, on the purchase of assets. And I see this a lot. I don't know if you do. Someone buys a car and they pay cash and they just tell you, I bought a car. You don't need that. You need the receipt. You need the tax invoice. You need the whole thing, right?
Need everything. That happens all the time. So they said, yeah, I purchased a car. Yep, here's the invoice. We need everything that to do with that purchase of that car. The invoice, did you do a trade-in with an existing motor vehicle? Have you got a lease schedule? All of that stuff. We need all of that.
So we're actually going to capture it better. So you go, tell us a bit about this write-off regime and where that's all heading this year and into next.
It's been as clear as mud in the last couple of years. So the government come out with various forms of writing off assets quickly. So to help businesses, pay less tax and stimulate growth in the economy. There's a lot of different dates there where things start and stop. So I'm just going to talk about what's currently going on. So at the moment, up until 30 June this year, if your turnover is under $50 million, you can instantly write off an asset, the total cost of it, as long as it's paid for and in place.
So it's got to be in your business. It can't have I've just paid a deposit and here it comes.
That's right. It can't be on a ship somewhere. It's got to be in place and ready for use, but you can write the whole thing off. Next year, that doesn't exist anymore. They're switching back to this instant asset write-off where there's a cap of $20,000 for you to write off those assets.
Okay. So any asset, 20,000 less, we can write off into the future, but those bigger ones, they're gone.
Yep.
Okay. And they go back to the ordinary depreciation regime, of which there seems to be multiple.
Yes.
Yes. Okay. Then let's jump into on electric vehicles. There seems a bit of changing into this space. It looks like the government are trying to get people to get onto batteries.
That's right. So that's right. So if you're a business and you provide an employee with an electric vehicle, there's no fringe benefits on that.
Okay. And I understand the luxury limit's a bit higher too. Plus, there's this additional 20% of any energy efficiency products that you install for your business. But that legislation's still to pass and it's capped at 20,000. So you spend 100, you get 120 back.
Right.
All right, brilliant. Hayley, there's been a bit of noise out there in the world of the students and this new regime coming in on HEX. From what I've seen, it's rather scary. What are you seeing out there?
Well, it's been put forward that this month, the HEX actual interest rate on HEX has gone up to 7%. So that means if you've got an existing HEX debt that you haven't paid off by June, this new interest rate will apply to it.
So now, 7%.
7%. Yes.
On our HEX debt.
Yes.
So a student with, 50,000 has got 3,500 just whacked on top for going to uni and doing studies.
Correct. Yes.
Wow. Okay. I reckon we're going to see some noise in this space. That's a lot.
Yeah. It'll be interesting to watch for the next couple of months, especially as it's implemented and people see the impact.
Yeah. Well, they're not going to really know until they get their statements in the new year, right? And suddenly they're going to see this massive increase that they haven't had before. I mean, it used to be capped at CPI, so they've just suddenly increased it to 7%.
Yeah.
Wow.
Right.
Okay. Hayley, we've seen a bit of change to the super it's been legislated and coming into effect of 1 July. What's happening there?
Yeah. So again, the super rate is going up by 0.5%. So it goes up to 11%. Super rate is capped at 12. That's where we're going to get to. So that really needs, when we're talking about our cash flow management, and we need to consider that.
So it costs us 11% to have an employee.
Correct.
And it's a lot of money for businesses to come up with. And in this time of pressures, inflationary interest rate rises, that's another 5% to your bottom line.
It is. And on the other hand, so employees and employers really need to look at their contracts to ensure how that's going to really impact them, whether it's actually going to be less cash in the hand. And employers need to inform their employees about it.
So it comes down the in or ex super contract that the person has. In, obviously, the employee, where's the benefit? Where's the cost, the increase? And ex, the employer's paying for it.
Yeah, correct.
Hugo, coming back to you, we've seen a lot of noise this year, and probably the last 9 months, we've been seeing change after change and information coming through on all this trust and beneficiaries, and they're calling it the 100A legislation. Give us a little bit of a segue into a bit of an understanding on that.
Sure. So I think the ATO's come out with legislation. This was a couple of years back. It wasn't specifically designed for what's going on at the moment, but it's affecting people who have trusts. So the idea there is the ATO is looking at trusts where income is distributed down to beneficiaries, but other people are getting the use of the asset. So I guess trusts are distributing income to, mum and dad, adult children, but mum and dad are actually using that income to do whatever they want to do.
Okay, so I got a 21-year-old child and the trust distributes money to that. I wouldn't normally pay that money, that it'd be gifted back. That's all off, and we've got to make sure that the ultimate beneficiary receives a benefit.
Exactly.
Okay. And really, it's just a management program. It's just something where we've got to keep working papers and work out that beneficiary's entitlement.
That's right. So there's two things there. I guess some people aren't going to distribute to their adult children as much. And the other thing is that they'll start paying those expenses, any expenses that they pay for their child, out of the trust to sort of wear down their beneficiary account.
We're back to the lovely paperwork and compliance, and really another box to tick.
It is.
Or another few in this case, if you've got multiple children.
That's right.
Yeah, right. Everything I'm hearing, guys, is it's all about your footprint, reconciling that footprint and making sure it sort of meets, the various ways it can be tested, and then crossing the line and really having all that substantiation behind us.
That's right.
Now, Hugo, before we get off the beautiful topic of tax planning, have you got any other overhanging fruit that you can add to the...
Yeah, so as far as things that stop at 30 June this year, the carryback loss provisions. So this is where a company has losses in this current year. They can actually apply those losses against the prior year and get tax refunded from that prior year. So that stops at 30 June. On top of that, we've also got the work from home deduction. So and there's two ways to claim working from home. You can claim the ATO rate, which is a set rate per hour, and then there's a percentage of the actual cost that you incur. So the ATO rate is changing, and funnily enough, it's changing at 1st of March, which is annoying.
That doesn't tie into any year end or anything logical, right?
No, that's right. There's no logic.
That's probably the date of the budget, or it's got something to do with the date they decreed it, and that's where they drew the line in the sand.
That's right.
So the carryback loss regime is ceasing, and is there anything else that's changing?
There is the ATO. They provide deduction rate for when you're working at home. That's now changing to 67 cents an hour. However, in the past, it didn't include internet and mobile phone. Now it does.
Okay. So you're getting no more per hour, but you're including more costs of running your home.
That's right. So you really need to work out whether using that rate still makes sense or you apply the actual cost rate.
Wowzers. There's a funny old timeline around when this starts and the compliance regime kicks in, is it?
The hourly rate starts on 1 July 22.
Yeah, isn't it, Hugo, the 1st of March, there's some new record keeping that they have to comply with. I think you believe you need to keep a timesheet or a roster to prove your actual work from
So another logbook.
Another logbook.
Pretty much. Up until 1 March, you can just submit, the hours that you think were reasonable.
Yeah.
After that date, you've actually got to do
a logbook. Right.
But I do believe you don't have to have a designated office area or space. Is that right? It can just be working in front of the TV.
Okay. Well, That's going to be challenging for a lot of taxpayers, I dare say. And I don't know about you guys, but the traffic's still a bit thinner than pre-COVID. So especially on Fridays and Mondays. I don't know if you've seen that.
Oh,
So
yeah.
I think a lot of people still work at home. So there's a lot of people going to be doing logbooks.
That's right.
Oh, dear. Okay. Look, I think for me, this solidifies why we have a program. Now, we do this talk, we're trying to educate people somewhat, and there's so much to know. So it's just impossible to relay everything. And the tax planning program that we run with certain clients is really tailored. Hugo, do you find that having a client holding their hand through gets them a much better outcome than they filling out the checklist themselves?
Exactly, it does. Look, not just in minimising tax, but giving them an expectation of what that tax bill or refund is going to look like in the future.
Yeah, and it's rather complex, right?
It is, definitely, especially when you've got multiple entities in a group.
Yeah. Okay. So to me, by sending out the checklist, you're leading the horse to water, but more often than I dare say that goes in straight in the top drawer and never be used. Do you think the tailored program sort of forces all that, doesn't it?
I think so. And it helps people sort of look at what they've got in front of them and address it.
Yeah, good. And Hayley, just conversely with getting ready for the end of the financial year and you've got your checklist, which is extraordinary. Do you think that business owners are really going to do that, or are you finding more often than not they're not? Do you think, have you sat down with your business clients and are they doing that checklist themselves, or has it really got to be dragged out?
Oh, look, the majority of my clients will do it because they want to see that business succeed, really, and make the most of our services. So they will do it. Of course, you've got the ones out there that you need to push along a little to provide what we need. But I think most of our clients really want to do well.
So really, I think it's a must to do your checklist, because if you are running a business and you don't have this stuff, you're going to be spending thousands of dollars. You're not going to remember. You're going to be chasing data that might be so hard to uncover if you don't get on top of it early. So your clients really get a lot out of it.
Yeah, they do. Yeah, they're all prepared for their accountants. And it's not just to prepare, and as you're saying, looking back, you need that information to move forward and look at your future business planning, budgets and cash flow.
Let's just touch on that a little bit. It's probably been something that business owners haven't done enough of. And really, the limitations around softwares, I think, had a bit to do with that. And the fact that many businesses were still running shoeboxes and really didn't have the signs in front of them of what's going on. Are you finding that business owners are now getting more proactive about their budgeting and forecasting and really getting onto it?
Definitely. I think because the climate's still so uncertain in a lot of areas, businesses are more wanting those extra reports and wanting to make future plans for their business to ensure its success.
And do you offer that as a service as part of your program?
Yeah, we do. Yeah.
Okay.
We can sit down with businesses and both of us working together as your accountant and bookkeeper, we can put a future plan in place for you.
So that a future plan being a budget for the business.
Budget, goals, cash flow, all that.
So cash flow, you mentioned earlier, critical.
Yes.
So it will allow them to monitor their cash flow and really plan for it.
Correct. Yeah. And we can continually update that for them moving forward so that they've got a moving cash flow projection.
Is this an expensive exercise?
Not at all. Not at all. When you're considering the success of your business and the benefits that you'll get out of this, it's a small cost, really.
Yeah.
So the truth is, Hayley, that people shouldn't be focusing on their books. They should be out there trying to grow their business rather than save a few bucks.
Exactly. Get the professionals to do it. They concentrate on what they're good at.
And they get it.
Yeah.
Okay. So, Hayley, you've sort of touched on a really important area with this business planning. And by setting the budgets and targets, it's really like you're at the high jump at the Olympics. You've set the bar and it really helps you as a business owner achieve those goals. Are you seeing a bit of that with your business owners?
Definitely. I think if you plan and actually write down your goals and where you want to be, you're more likely to achieve them.
Absolutely. Absolutely. We can see them.
Yeah.
And you've definitely got something to aim at. Okay. Look, this has been great, guys. And I know it's been high level for everyone out there. And we really do encourage you to download the programs, the individual and the business checklist. Please have a look at them. At least have a look, because there is stuff in there that I can pretty well guarantee everyone will get a benefit from. Even one little thing can change your outcome quite significantly. Hugo, in summing up, give us your broad picture of what you do let's get ready for the end of financial year. What do you do?
So I need to use our checklist to check what tasks you need to complete before the end of the year.
So Hayley's little end of year tick box.
Exactly. And then use that same checklist to work out what tax deductions and concessions you might be able to claim.
So really just something on that. Any expense earned, in your income is likely to be deductible unless it's caught by another rule.
Exactly.
Yep. Checklist will fix that up. Next.
If all this is too hard, then go and see a professional like us and we'll help you through it. Being the end of the year, it's also a really good time to review your finances and see where you are, if you've got any goals, for how long you are.
And I dare say part of that is also what assets you've got out there and the investments, and are they doing well or are they badly? You need to get rid of them and reassess, that sort of stuff.
Exactly. The one thing to be aware of is be aware of tax refund scams. So at this time of year, they're pretty rampant.
Okay. Now, we did a talk on this a couple of weeks back, but really important, this scamming stuff. We're getting probably one inquiry a day from clients getting apparent calls from the ATO. So it's really on the radar, yeah?
Exactly. Not just clients. I get it as well.
Okay. So if someone rings you and says you got a refund, you need to do a few things, what do you do?
You don't respond to that. You call your accountant or you call the ATO directly.
Great.
Yeah, look, it's also a good time of year to review your business plans, just to make sure that they've been updated and they still make sense.
And the business structure is part of those plans to really make sure it's working for the way you want to operate, right?
It is. That's something that we help our clients with.
Yeah. So more importantly, seek professional advice again.
Exactly.
It's gone the full circle. All right. And there's one you both forgot that I'm really, I'm a bit upset about, and many staff out there would be upset
What's
about.
that?
It's planning that end of financial year function.
Oh, yeah.
That's planned.
That's critical. Now, unfortunately, it's subject to FBT, here you go, but that function is really good to allow your team to reset and be prepared for the new year.
There's no FBT if you buy the drinks.
Thank you. Well, guys, I really appreciate your time, and the year that was is going to be behind us very shortly. As usual, anyone who wants to contact us, please feel free. You'll find us on the web, navwealth.com.au. And we offered a tailored tax planning program that will meet your needs, whether they're pretty simple or quite extensive. What I can guarantee, and I'm getting the nod from my panelists here, is you will save money and, more importantly, you'll be prepared. So, guys, once again, thank you. Hayley, I really appreciate your time. It's been a great year. Look forward to next.
Yeah, it's been a pleasure, Simon, and can't wait to 2024.
That's a scary proposition. And Hugo, once again, thank you for your time. And I know it's that hectic time of year for the accounting arm, and really appreciate it.
No problem. See you with the drinks.
See you there.
Thank you for listening to NavTalk. If you'd like to catch up on other episodes from this series or previous, head to our Navwealth website. Until next time.